Hello and welcome back to Core Finance. I'm Matt Brown and I am joined by Ken Odeluga, who is a market analyst at City Index for the second of our videos today. And we're looking at all things German today. Yes. Starting off looking at Deutsche Bank, and it's been a bit of a bumpy ride, certainly for investors, anyone being long of this stock.
Yes, I mean, certainly if you're an investor back in 2007, it's been an extremely bumpy ride. You've seen your price return come. You've seen the shares come down from 91 euros in May 2007. It's not on that chart. To currently we're in the low double digits. The weekly chart comes first because I wanted to contextualize it. This year, essentially, it has been a bumpy ride, but it hasn't been. It's just been in quite a defined range. What is that? Around about 9 euros. And it looks like the ceiling is around about 17 euros odd and 60 odd cents. And the low we saw was around about 9, call it 9 euros at the very, very end of the year and sort of bound. We haven't managed to get much further than that 18 euros level this year. And that's essentially the context that, we're looking at this. Obviously, the wider sort of context today is that we've got the ECB meeting. Banks, particularly Deutsche Bank, particularly sensitive to rates or any suggestion about rates. They want higher rates. They want, the central bank to start moving to remove the unconventional stimulus, and the shares should actually rise. They've actually been coming down as the pessimism is setting in about, any sort of signal on tapering happening this year. I still believe it's going to happen.
We can see that on the daily chart.
Yes, absolutely.
Just focus in.
So there you go, a bit of a downtrend and actually quite a channel. So the hope is, of course, that the signal may come today. I think it's doubtful, but more likely October. But in any case, if they do give that signal, that will be a benefit for Deutsche Bank. Looking back at the chart, you should expect, of course, any sort of break of established trend to bring about increased momentum. Very promising. Look at the momentum gauge. The RSI indicator has actually been oversold for quite a while now, and properly oversold, not just touching the lower bound, right beyond it, and testing it twice, and now pointing upwards. So there's some suggestion that there's a bit of a change in the medium-term trend here. There's a bit of a gap there above 13 euros odd, 13.60 it might be. If we can get into that gap, there should be a bit more momentum on the upside as well. But it is quite touch and go. Overall, still quite pessimistic about this share. We all know about the structural and fundamental problems about it. So, but it's a bit of a trade to be aware of today.
Understood. And as a catalyst, if we see QE reduction in the balance book and potentially interest rate hikes, this is all positive.
Exactly. So, yes.
And moving on, obviously, the Deutsche Bank being part of the DAX.
Yes.
And we've seen the DAX sell off, and maybe this is attributed to the strength of the euro.
Yes, absolutely, yeah. So the problem is, of course, that this is the counterpoint, So we're looking for a bit of a, implied hedge here, or maybe just two ideas you might want to keep in mind. The DAX has declined from those all-time highs. I believe they were around about almost 13,000 in June. Has been quite marked. But just look what's happening right now in the last few days. We appear to have broken above that declining trend, which has been validated a number of times by the price tagging it over the last few months. So it is quite valid. We may have a bit of momentum on the upside, broken through that. We had some support around 38% retracement level of the rise from November last year to that high. So there's a bit of orderliness here. We have filled the gap that we opened in April 2017. It could go either way now, but it looks like there's a bit of momentum building here on the upside. Although I wouldn't read too much into the RSI. It's really quite neutral in the middle of the range there. But the calculus here, of course, is should the bank indicate that it's getting in any way cold feet. I think these cold feet will be quite temporary, that it will weaken the euro, and with the weaker euro, of course, a nation of exporters and the 30 exporters, major exporters in the DAX, it should actually be a benefit for the underlying index, and the shares should rise. I don't think there'll be much resistance there, around about 23.6% retracement level. The next real resistance will be around about 12,292. Maybe that's the limit for for the short to medium term. But maybe, just maybe, this chart is looking like the most pronounced selling has now passed for the DAX. If I'm wrong, I think we see a reversal around about. You can see there's a bit of resistance around their current levels. If we just move back a little bit before we had a bit of a drop, if I'm wrong, I think we're going to fail around here and reverse back through, and then we start looking about really whether this support that you can see in August is going to hold.
Understood. So lots to look out for there.
Yeah.
Ken, market analyst at City Index, thank you so much for joining us today.
My pleasure. Thank you.